My name is Mark Figueroa, and I'm the Chief Marketing Officer here at Tiger 21. And thank you for joining us today for Stewarding Wealth of the Future for the Future, 17 years of Tiger 21 asset allocation trends. This webinar is part of a series of conversations powered by Tiger 21, designed to give you a look into the real conversations happening in the Tiger 21 community. 1,600 extraordinary people and successful entrepreneurs and ultra high net worth investors. And today we're focused on conversations around asset allocations and investment decisions in our network. And we'll also talk a little bit about the conversations that go beyond finances at Tiger 21. If you have any questions for our panelists as we get going, please type them in the chat and we'll address them at the end of the call. And we do ask that to please type in your first name and the location with your question. That'd be great. So now, without further ado, I'd like to introduce Tim Daniels, our president and CEO of Tiger 21, who will be moderating the call today. Tim?
Yeah, thank you, Mark. And thanks to all of you who joined us today, whether it's your morning, your afternoon, or evening. Really pleased that you've been able to join us. And for those of you who may be less familiar with Tiger 21, we bring together an exceptional group of wealth creators to navigate the issues and the opportunities that stem from the success that you've had and to learn from the collective intelligence of accomplished peers. Our asset allocation reports offer glimpses into this collective intelligence. And in this regard, as it relates to the financial dimension of how success has impacted our members' lives. And as part of our 25th anniversary celebration, we compiled all of our asset allocation reports going back to 2007, which is when we first started tracking this data. And we're pleased to be able to provide you with a copy of this after our session today. Now, to offer some background, members report their asset allocations each year during something called their portfolio defense, which is an opportunity for members to confidentially explore their entire investment portfolio and to gather candid feedback from their group on assets, liabilities, income, expenses, as well as their plan relative to these. Now, for the avoidance of doubt, it's not just about the finance or investment elements. Members go beyond these to gather input on all aspects of their lives. So today, I'm honored to have two fantastic Tiger 21 chairs here, two of my favorites, actually, to unpack some of this data and to share insights into the Tiger 21 experience. Now, again, if you're not familiar, chairs at Tiger 21 are professional facilitators. They're proven leaders with real-world experience, and they lead groups of 12 to 15 members. Together, we'll discuss how chairs use these types of insights to guide learning opportunities in their groups. So let me introduce our chairs today. Let me first introduce Rob Fleischman. Rob is a chair with a Boston group as well as a global group. Now, while most Tiger 21 groups are geographically focused, global groups are not confined to any specific geography, and they primarily meet virtually. Rob actually launched our first global group a number of years ago. Rob first joined Tiger 21 as a member and then transitioned to becoming a chair in 2018. I also want to introduce Lorine Pendleton. Now, coincidentally, Lorine also joined us as a chair in 2018, and she actually chairs two New York City groups. And Rob, Lorine, thanks to you both for joining us. To set the stage, I'm going to ask each of you to give us a sentence or two about your background and how you see your role as a Tiger 21 chair. And Rob, if we could start with you.
Sure, absolutely. Tim, as you said, I've been involved with Tiger for about a decade, as a member for about 5 years before becoming a chair. I came in as a nerdy MIT tech entrepreneur with a number of companies and, knew very little about investing, portfolios, living with wealth, had the typical experience of feeling like I was on an island after my exit. Found the Tiger 21 experience incredibly valuable. Every part of my life improved: finances, portfolio, relationships with wealth, spending, saving, estate, legacy, philanthropy, just became better, more meaningful. And that really motivated me to become a chair. And I've been involved with this, as I said, for over a decade. It's just been a profound experience.
Well, thanks for that, Rob. Lorine, maybe a sentence or two from you?
Great. Yeah, I'll be a chair. It'll be 8 years in May, which is time goes by fast, but it's been amazing. So I came to Tiger, former media entertainment lawyer turned VC. I left the law firm world to launch some venture capital funds and became a chair at Tiger, which has been an amazing experience for me. What I do with my members, I work with my members focusing on the issues and challenges that they have. That we discuss in our monthly meetings everything from family dynamics, how they raise kids, or just dealing with family members and friends now that they have a lot of wealth. Also, we say you're in the stay rich business, so wealth preservation is really key. They want to keep the money that they have. Also, legacy and philanthropy is important for a lot of our members. And the last thing is investment ideas. They bring investment ideas, they share it with their members, and we talk about that.
Well, and we're going to talk a lot about that today. Thanks to you both again for joining us for the session today. Now, before we begin to get into the insights that you've gleaned from this report and from your experiences as chairs, just a brief disclaimer about today's presentation, which you can see here. So as you review this, let's get into it. Let's kick off. So the first question that I'd like to put to both Lorine and Rob, both members and chairs come to Tiger 21 with their own expertise and interests, and we'd like to get the benefit of some of your expertise. And let's start by asking, when you look at the data in this report, what really struck you about it? And Lorine, if you don't mind, maybe we can start with you.
Yeah, sure. So before I jump in, I just want to just mention the portfolio defense. We gather that information. The asset allocation is gathered during portfolio defense that we have with our members. So it's anonymized. We don't, disclose who the members, their names or anything like that, and we don't retain that information. So I just wanted to kind of set that stage. And so if we're looking at, one of the things that stuck out, and because I'm in private equity venture, is particularly focused on that. But what we see is the last several years, private equity has become our largest asset class. So it vacillates between real estate and private equity. And really, it makes sense because a lot of our members, they created their wealth through, they're entrepreneurs. Most of them are entrepreneurs. A lot of them had liquidity events and exit, and that's why they have the wealth that they have. And so, by definition, they're a bit more comfortable with private equity because they're entrepreneurs, and actually, they can bring their operational experience and subject matter expertise when looking at, in the private equity world. And so they're above average for most people, investors in private equity. And so that's a really an interesting data point about our members. And if you look at actually the United States, an interesting data point, actually 87% of the firms in the United States that have over 100 million or more are actually private companies. And so that's really fascinating. So the majority of companies in the United States that have $100 million or more in revenue are actually private. And in fact, just recently, CNBC was interviewed some people from BlackRock. BlackRock is now exploring, ways to make private equity accessible to the average retail investor. So typically, people who are in private equity, invest in private equity, tend to be high net worth, ultra high net worth. But BlackRock is now looking at bringing that to mainstream investors.
Fantastic. Thanks for that, Lorine. Rob, overview comments from you?
Yeah, so a couple of things really strike me when I look at this. The first thing is I have to remind all the viewers that these are averages, right? So if we have two members, one shows up, maybe he's a stock picker, retired fund manager. They might have a portfolio almost entirely public equities. A real estate professional might come to Tiger and have a portfolio that's mostly real estate. When we average the two, we're going to see a portfolio that's 50-50. So the specifics of what percentage you see in this report take as a point of interest. For example, you join Tiger and you say, as Lorine said, wow, quite a bit of private equity there. And I don't have any, in my portfolio. So, that might be an area of exploration and learning for me. And that's really the experience of most of our members. They look at these reports and they say, wow, my peers have allocations to these sectors. I don't have any allocation to, and that's where the start of learning is. The other thing I'd point out, Tim, is that, we're in an interesting situation economically, a world economy. People are fearful. A lot of people think that, oh, God, I got to run to cash. Well, look at our cash allocation over the years. Tiger members are not running to cash. We've been pretty risk on forever. 9%, sure, it's a little low, but it's not that far off, right? Of our usual average. I'll also throw something else that's very interesting. It's sort of funny when I look at cash percentages, because this is not how Tiger 21 members decide how much cash we have. We never do this. When we're in meetings, we actually look as cash as a buffer, as a safety. We don't use percentages. We use usually a multiple of your burn rate. So for example, let's say your family spends $250,000, $500,000 a year, and you're at your portfolio defense. Your fellow members will probably recommend 12, 18, 24 months of cash. That way, if something happens, if there's a recession, if there's a surprise in your life, or the economy hands you a curveball, you'll have enough cash to navigate that, to get through those tough times. So let's say you're burning 500K a year. I bet your group will recommend you have 500, 750,000, maybe $1 million or more of cash just all the time, just to give you that buffer. So we don't really work in percentages, but it is fascinating to see how the cash percentage has been the same for so long.
And Rob, you do tend to get, and this is a metric that I've heard, you reference sort of keeping a multiple of your annual burn rate. And is that something that gets talked a lot about in the meetings?
Absolutely. It really does. We don't want people to have to do what we call forced selling. As Lorraine said, we're in the wealth preservation business. We're in the stay rich business, right? I mean, yes, our portfolios grow and we talk about opportunities. And, if you join Tiger, I can guarantee you that you're going to be much happier about the way you interface with wealth and live with wealth over time. But our first priority is we want people to stay wealthy. And the first thing is sleeping well at night and having a nice cash buffer to get you through the unknown. And the unknown unknowns is really important. So absolutely, Tim, it's a topic that comes up every time in almost every portfolio defense. How much cash do you have? What is your burn rate? Will it get you through an unknown period of time? And if not, well, we better get that cash up. And it's different for each person. Depends on your spending, not on your, what's fascinating is it doesn't depend on your wealth, depends on your spending.
Yes, absolutely. Well, and you touched on the community largely being risk on, and Lorine, we'll come back to you on that. You obviously live in the venture capital world, and that is part of a very much of a risk on appetite. But if you looked at the Tiger 21 members, how do they reconcile being more heavily weighted toward riskier assets?
That's a good question. I'll give you an example. Bitcoin now, is all the rage, but, I remember when we first started talking about Bitcoin, of course we had some members who were in it, were kind of first adopters, but we really started talking about Bitcoin during the pandemic. And we had a couple of speakers come in and talk about Bitcoin. And, as I mentioned, we had early adopters of it. Now, while not everyone is invested in Bitcoin, it's definitely much more accepted, and people are open to the idea. Or some people say, we're gonna put some money in it, so have some exposure to asset class. And so, what I would say is Tiger allows that forum to discuss these type of investment opportunities. And so, Bitcoin was one of them. One of those. I mean, obviously we have a lot of other things that we discussed, but people got more comfortable, particularly as Bitcoin became more adopted by institutional investors. So that was one area that we spent quite a bit of time discussing.
As you talk generally about portfolio allocation, I'm guessing that in the groups, there are interesting investment ideas, specific investment opportunities that get discussed as well. Can you talk about how these come about? Bitcoin, certainly, I think you've touched on it, Lorine, but maybe, other areas where you get into specific investment areas, and how do those ideas get processed in the group meetings?
Yeah, I mean, I think, we cover all kinds of, so private equity. I'll give you an example. There was a member who was in a fund, private equity fund, a really interesting fund, and, international fund, and he mentioned it. And so the members said, hey, we'd love to learn more about this topic, looking at international exposure. And so I brought in the fund that's running that, and we basically, they presented on just in general, like a 30,000 foot view of what was happening, and then also specifically their fund. And when they left the room, it was great because for 15 minutes, the members kind of, poke holes, pros and cons, and that was really great because they were in a room where they could, share ideas and their perspective. And so some were more well-versed in private equity. Others, may have not invested in private equity. And so it was a learning experience and the things that they need to look for. And so, that's what we can bring to Tiger. And our members, a lot of them say, there's no other forum or opportunity where they can have, that kind of, peers where they can discuss these things.
Absolutely. Rob, maybe pick up on that from your groups.
Yeah, I would say that there's a profound difference from learning from someone who's selling you something than someone who isn't. So one of the most profound things about Tiger is you enter this group meeting with a dozen, 15 peers who are experts in different things. You show up as a tech entrepreneur, but sitting next to you is someone who's been doing hotels for 20 years. Next to them is a venture capitalist, someone who runs a venture capital fund. Next to them is someone who's been trading public equities for 15 years. And you talk about topics. And let me tell you, it's really different than when someone says, hey, Tim, this is what I think you should do, versus, hey, Tim, look at what I did. Look at my portfolio. Look at how I've invested. Now, maybe what I did isn't right for you, Tim, but that's a different kind of advice. And even more importantly, I'm not showing you my successes only. I'm showing you my failures, right? So, hey, I invested in this venture fund or this real estate fund, and it didn't work out. And here's what I learned from it. That kind of advice is really profound.
And as you see evolutions, I'll put this to both of you. Maybe Lorine, you can pick up on it first. But evolutions in asset classes. Questions come in from Rupert in the UK about venture capital within the private equity allocation that you see here. How do you sort of think about those evolutions and the trends within those? And so, as an example, I think we're seeing a real lift, it seems, in the community in the private credit area. And I know that's been an area that you and I have talked about. Maybe talk a little bit about how those things are processed as well.
Yeah, I mean, so private credit definitely, members are looking at that. Private credit, has grown, as an asset class that people are interested in. And so we had a speaker come in and talk about one of the top, who runs some of the top private credit funds, and an expert in that, has also spoken at our general Tiger big, meetings that we have for all the members as well. And so, yeah, again, some members had exposure to private credit, some had never even thought about it. And so, they were really open to learning about it, and now they're seriously considering it. What I would say really the strength of Tiger is really we have this unbiased, unbiased advice. And so typically our members, they all have advisors, they have attorneys that they work with, and that's great. But they pay these people, or these people, get paid because of the services that they render. Whereas Tiger, you look to the left, this person may have more money than you. They may have be where you were, 10 years ago, but they've evolved in terms of been, dealing with their wealth for 10 years or so, and you can learn from them. And I think that's really the value of Tiger. And our members say that over and over again, particularly ones who have just come into wealth. And it could be really lonely for them. And they don't have, friends and family that they can, talk about these things. And probably those people would say, hey, that's a problem. I wish I had that problem, right? But they really do. I mean, it's an issue, an issue and challenge having wealth. A lot of people don't realize that. And so, we provide that opportunity and that forum for them to discuss these things.
And Rob, thank you, Lorine. And Rob, one of the things that I'm curious about is, many members will come in probably overweighted in an asset class where they've created their wealth. How do they think about sort of redistributing to a healthier asset allocation, and how does that happen with the counsel from the group?
Tim, that happens all the time, and it's really familiarity, right? I mean, for myself, I came in, I didn't know anything about real estate. The only real estate I had was my house. I didn't even know the different types of real estate, how to access them, Lorraine talked about private credit. I mean, the credit is a space with dozens of different sub areas in it. So what usually happens, Tim, is, a new member will come into the meeting, and boy, do they feel like they're drinking from the fire hose. The learning is incredible. And not every space works for everybody, but if you're a public equity guy, you might discover private equity might be the first place you go. Similarities, maybe it's not as liquid, but the valuations are similar, how you pick the companies, the terms, things like that. And it's really a learning experience. I mean, over the years, you build a portfolio that helps you sleep at night, that enhances your returns. And honestly, it's really for people who are curious, who want to run the show. But I always do an analogy. I'm up here in Boston, and we have the Patriots used to be a wonderful, powerful football team, and maybe someday we'll return to greatness. But you can have an offensive coach, you can have a defensive coach, you can have a quarterback coach, but sometimes you want to call the plays. So each of our members has a different dynamic in how they run their teams. Some members run the whole team, they call all the plays, and some members have a head coach and they're directing that coach as an owner. So I would say it really starts with learning, and that's how the diversity comes. You don't just jump in and start buying all kinds of crazy stuff you don't understand. That just doesn't happen. So it's really a process.
Well, and maybe shifting to shed a little bit of a light on something that we've touched on before, which is the portfolio defense. Because obviously, this is when you do a deep dive. This is when you have dedicated time from these 12 to 14 other amazing individuals with diverse backgrounds who are there only for you and to help you work through various items in your investing and life portfolio, if you will. And so let's talk about, sort of the asset allocation aspect and the evaluation of that in the portfolio defense. Now, just as a note for everybody on this call, the portfolio defense is, along with everything else at Tiger 21, is 100% confidential. Confidentiality is a cornerstone, a benchmark of Tiger 21. But let's talk a little bit about the portfolio defense experience. And Rob, maybe I can start with you. Shed a little bit of light on this.
Sure. It's interesting. You work with your chair ahead of time to prepare documents, details, the story of your life, how you gained your wealth, all of these questions. You have dozens and dozens of questions that we ask our members. The chair helps you prepare that. That data is then given to your fellow members in your group ahead of time, and they study that. And then most importantly, your chair works with you on a bunch of questions. Now, these questions are questions for the group. So you arrive at your meeting and the portfolio defense starts, and that, different chairs run it different ways, but there's usually pictures and introductions and discussions and then clarifying questions. But basically, this is an incredibly selfish exercise. You walk into this room with 15 geniuses that are as experienced as you, perhaps in areas you know nothing about, and they've studied your past, they've studied your questions, they're ready with answers, they're ready to ask you clarifying questions. And all of a sudden you have this multi-hour session all about you, where everyone is trying to help you, Tim, is trying to help you with your questions for them. And they have nothing to sell you. They have no upside or downside, whether they take your advice or not. So they give you the real deal. And it is profound. It is life-changing. I'll be honest with you. I've seen questions in portfolio defenses that people don't talk to their spouses about. Really private things, not just about asset allocations. I always joke and say, the money stuff is the easy stuff at Tiger. You join my group, you're gonna have a wonderful financial experience. Your returns are gonna go up, your clarity is gonna go up, your simplicity is gonna go up, your fees are gonna go down, all this wonderful stuff. I can't guarantee that, but that's what I say anyway. But but the real stuff, right? The real stuff is living with wealth. You all of a sudden come into wealth and you're out to dinner with your friends. Well, do you pick up the bill all the time? Or not? How do you talk to your children about that? How do you keep your children motivated to build a wonderful life when, you now have enough wealth that they don't really need to do anything? Those are real problems. A lot of stuff like that we talk about in the portfolio defense beyond the dollars.
Well, and I'm glad you touched on that, Rob. Lorine, let's turn it over to you. Pull back the curtain on the portfolio defenses in your groups.
Yeah, no, it's very similar to what Rob would say. What I would say, though, I tell our members it's carefrontation. And so, these are people who, are there to help you. No one has a vested interest in making money or anything like that. And again, back to that's the uniqueness of Tiger. Everyone is there because they want to be there. And so, these questions you bring to the group, there's really no right or wrong answer. It's really to provide you with a different perspective to help you avoid blind spots. And so, part of what I do is I tell the members, just take it in, don't get defensive, listen to what people are saying to you, and then you'll leave and decide what makes sense for you. But they're here to help you. And where do you have that opportunity where you're going to have, 14 or 15 people who are some of the most successful people who've experienced a lot of different things, have perspective, are going to be, in the room, for 2 hours helping you, navigate these questions that you have. And the questions, revolve around, to Rob's point, yes, my asset allocation, I may be in real estate, a lot of my wealth is tied up in real estate. Should I have more exposure to public equities or private equity? We talk about those things. But really the meat and bones of the discussion are, about your kids, or, you're dating someone, you want to get married, do they sign a prenup? All those kind of things that are a lot of the human elements of, a person, and, you happen to have wealth, but, really talking about, just, things that just not only just investments and finance, but also, some of the issues and challenges of having wealth. And so we do a deep dive in those things as well. And I would say pretty much every PD has an issue around those things that I touched on.
Well, it's interesting, Lorine and Rob, it oftentimes seems that the financial and investing elements are there to sort of help inform the other parts of your life. It's sort of like, what are your broader objectives, and how do the financial or investment elements sort of help facilitate those? And I think that's sort of an element of what you both have touched on, and in all aspects of people's lives. Um, let's talk a little bit, and again, I think you've touched on this to a certain extent, but let's go a little bit deeper. What are some of the other things that members talk about beyond the financial elements? And, there's a question from Bob and Big Sky who talks about, the emphasis on estate planning and philanthropy. And I'm really glad you brought that up, Bob, because, both of those are critically important parts of the discussion as we think about all aspects. So, Lorine, maybe start off talking about some of these other elements and how they're woven into the discussions.
Yes, I'll start off because we got that question about estate planning, philanthropy. We spend a lot of time on that. Obviously every member is at a different stage of that process. Some, I'm thinking about a member I have, he has done his estate planning for a very long time. He has a family business and the kids are involved in his business. And so he brings that wealth of like how he set up different things, trust. And so he shares that with other members. We have some members who are now like, have newly found wealth and, are new to wealth. And so they're thinking about that. Obviously, if people have kids versus people who don't have kids, their estate planning may look different. And so, yes, we absolutely do discuss that. I brought in experts who are experts on estate planning as well as philanthropy. I touched on, what I would say is also, members bring their whole selves to Tiger. And so not just like the financial hat, but they will switch out different hats. And one of those is, we have quite a few members who are single and are dating. And so, and some obviously who are not, but, that's a big discussion around how do they date? When do they bring their significant other to their home? Because they'll see, where they live and like that they obviously have wealth. And so, they really are keen on, is this person with me because of me or because of the money I have? And then how do I navigate that? And so that's actually an interesting area. And then we do have a singles network at Tiger. I know we're going to get into like the various networks. So we have groups as well and around different interests. And so that's really interesting. Also, a big thing is we have a lot of members who recently exited and now they went from, having a company, they had tons of employees, they were the CEO of their company and now they sold it. And yes, they have a lot of money in the bank, but they've struggled with what's their why? Like what's their purpose in life and their why? And, do they go back and start another business? A lot of them, and, we'll talk about, you may have been lucky, like the timing was right for what you were doing. Can you replicate that again? You may not be able to. So what else are you going to do with your life? And, a lot of them are, have a lot of years still left. And so we explore those topics a lot. And, now you have, maybe you use your time, talent, and treasure in a way that, can benefit others or, we navigate all that. And so that's really interesting. And then obviously we talk a lot about legacy, whether it's with their family or what do they, want to be, when it's all said and done, what do they want to be known for? And then philanthropy, making the world a better place. And some people have, specific things that are really important to them. And so focus on those things. But really, I would say people bring their whole self to Tiger.
Yeah, absolutely. And I do want to come back to the networks idea and the philanthropy aspect there because, Bob, one of the things that we do, Lorine mentioned networks, and these are the ways in which we kind of cut across our community of 1,600 members where you can and you want to dive deeper into topics that are, important to you. And so, while philanthropy will be touched on in your group, you may want to go even deeper on that. And we bring together communities of those individuals on areas of interest, expertise, lifestyle, whatever it may be, in what we call our networks. And they are, again, they allow you to go just much deeper. Rob, you talked earlier about the financial part being the easy stuff. Maybe talk a little bit more about, again, some of the other items that you've seen in your groups where members are touching on other really important areas of their lives.
Lorine, when she was speaking, I kept thinking of the following word, diversity, right? And that's what we really have here at Tiger, right? We have people who, yeah, sure, some of our members are a little older and retired. But we have people who are active and working, CEOs, people starting companies, people running large companies currently. We have women, men, minorities, spans the whole gamut here. We have people with kids, no kids, grandkids, young children, older children, and kids grow, right? And when you start talking about estate planning, that's not static. You don't roll into your estate planning attorney's office, get something done, put it on the shelf, and you're all set. That's just not the way it works. The world changes, you change, right? There's illness, there's grandchildren, maybe there are special needs, there's divorce. Navigating divorce is very common, both for men and women's side. But I think, Tim, you're right. Processing all of those things and living with wealth is really what happens at every meeting. Someone walks in and says, my son was just arrested, or, my wife needs cataract surgery. What do I do? Someone has this illness, where do I go? And we have these wonderful affinity groups within Tiger, but also the thing that's amazing is, look, Tim, if you called me up and said, Rob, I'm looking at these 3 or 4 BDCs, business development corporations I'd like to invest in. Well, Tim, in Tiger, we have a CEO of a publicly traded BDC. I can give you his number. You can give him a call. He'll have a conversation with you. He won't try and sell you on his, but he'll give you some great advice. Same thing with cataracts. We have one of the leading cataract surgeons in the world is a member. And, maybe you're not going to fly out and get him to do your surgery, but, having a conversation with those people, peer to peer is profound. So this, it's a lot more than just, hey, should I buy more Tesla? And maybe you shouldn't, or maybe you should. But that's wonderful. And then I guess I would just say that the last thing is, we all don't, play the same song at these meetings. You might get one member saying, you absolutely should do this. And then the next, and here's why. And the next member might say, I disagree 100%. And here's why. So navigating and learning happens all the time. It is not everybody singing with the same voice. And that's just very powerful.
Well, let me pick up on that. And I do want to start shifting. We've had a bunch of great questions that have come in, and I've been trying to reference a few as we've gone on, but let's sort of pivot to the questions from our participants here. And, one that sort of picks up on something that both of you have just said. Dominic from Toronto talks about how do we deal with the present crisis, and sort of the volatility that we're seeing around the world. How do we actually address that relative to navigating this with our portfolios? And so, I think you highlighted diversity, and it's diversity of opinion. And so you've got people that come from all different perspectives in these groups. Can you talk about how you as chairs navigate those conversations, and what do we expect of members relative to approaching conversations when they have different ideological positions on something?
I'll kick it off. So it's, Tiger is a microcosm of the world, right? And so you're going to have people, all kinds of people with different ideas and opinions. And so we have an operating agreement. I believe all the Tiger groups have that, and it's put together by the chair with the members that say, okay, this is how the group will operate. And one of those is just having respect for, we acknowledge that not everybody's going to have the same opinion as you. But we're going to treat everyone with respect. And it's an open forum. Not every group talks about politics and some of the, more, thorny issues, but both of my groups, we've agreed that we will allow that to happen as long as everyone has mutual respect for each other. And so I have to say, I've never had to kind of intervene and say, okay, time out. That's never happened. And I think people come with respect, and, they may not agree on everything. But they've gotten to know each other. And so everyone has a different perspective. And as long as people operate out of respect, and that's, and we're talking about what's going on and, right now, and what the market, as well as just the political climate, and everyone has different opinions, but, and so that's how we navigate it. And, people are there to be in a peer group and to be, learn from others. And so that's how, and we vet people in terms of, are they going to be the right type of person to be able to sit in a room and be respectful of everyone? They may not agree with what everyone's saying, but will be respectful.
I'm glad you added that last bit, Lorine, because that is an important part of the vetting process. And, for the avoidance of doubt here, Tiger 21 is not going to be a perfect fit for everyone. We need certain kinds of people, and people who are able to come in and participate in these conversations, who can both benefit from and contribute to the dialogue and any of these discussions. Rob, thoughts from your side on that?
Yeah, let me throw a couple other things at you, Tim. As you mentioned, I run a global group where geography is not fixed. We're all not in the same place. I'm fortunate to have some folks who are non-US. And Tim, you probably can give the numbers, but we have groups outside the US. We have London groups, Dubai, other places, and so having a non-US perspective is fascinating, right? You're talking about turmoil, right? But we have people who their currency isn't the US dollar. They have a very different view on things than we do. A US-centric view is very popular for us, but having a non-US view really adds to the table. I'm not saying there isn't crisis for non-US as well, but it really changes the conversation. When you don't have overnight inflation of 10 or 12%, for example, if you're living in Turkey, it really changes how you have asset allocation. Look, to navigate these worlds, of course, it's a conversation that's come up. I don't think members are making massive changes to their portfolio allocation. I don't see that. But what I do see is people being more selective in areas like real estate, which of course has been having a lot of trouble, looking for distressed opportunities, narrowing and raising the bar on how they evaluate managers. A few years ago, maybe, Tim Daniels is the new hot young real estate guy who just launched a fund. And nowadays they might be, well, Tim, we're kind of looking for maybe fund number 4 or 5, not fund 1 or 2. They're being a little more conservative, a little more selective in where they put their money now.
That's a great point, Rob, and I love adding in the global dimension to the community, because it really is a global network, as Rupert indicated, and by the way, Dominic, of course. Dominic, the last thing I'd say relative to your question is, there really is a perception among Tiger 21 members, and it probably comes from the fact that most of these people are wealth creators. Most of our members are wealth creators. It's now more than ever. And what our members really understand is, during periods of volatility and uncertainty, that's when opportunities really start to emerge. And the opportunity to really, the understanding of how to take advantage of that is really wonderful when you get these rich conversations with others who are sharing different perspectives. And so I think, to your point, these are when the conversations are really particularly valuable, I think, now more than ever, when you've got uncertainty and volatility. John didn't tell us where he's from, but he asked a question: do members usually manage their own portfolios, or are they working with a wealth manager? And, Lorine, maybe you can kick us off there. Rob, I know you touched a little bit on this before, that it kind of comes in all flavors, but Lorine, share your perspective on that.
Yeah, I mean, some members, I would say a lot of our members work with wealth advisors, and some members have their own family offices where they have that level of wealth, where they actually have professionals who manage their wealth alongside with them. Rob touched on it. You have some people who are the analogy to a football team. And by the way, I'm a Giants fan, so I feel your pain, Rob. And yeah, and so some have, some will be more hands-on, where they're the quarterback, and some will be, as Rob mentioned, an owner where, they have, people running the show, but they will give them direction. And so it really depends. And, again, Tiger, we are not investment advisors. We are a peer group. And so people come with these questions around finances, investments. We don't make advice. We don't give advice. But we provide the forum where they can discuss these issues.
Yeah, fantastic. Rob, anything you'd like to add to that one?
Yeah, let me just throw a couple things in there. I think there's an asset class division here. If you're interested in convertible bonds, that's just an asset class that, unless you have very, very specialized knowledge, you're going to have an advisor. You're going to have someone managing a convertible bond portfolio for you. Also, so in some areas, hey, I can just log into Schwab and Fidelity and do whatever the hell I want. But you can't do that with some asset classes. So some asset classes, just require an area of institutional or professional management. So again, there's a lot of mixes and matches. But I'd also say something else, Tim, and that is that, we're all aging and our interests change. When you're in your 40s or 50s, you might be very involved in watching the market. And then as you get older, you might say, that's just not what keeps me going these days. I don't want to wake up every morning and, read the Wall Street Journal or watch CNBC or whatever information source you use. You may want to be kicking back a little bit. And then maybe you turn some things over to other people. It could be, as Lorine said, a family office. Maybe there's another family member, or maybe there's an advisor. So that's really a fluid, dynamic thing. The other thing I'd say is that, one of the other things that we didn't really mention here, Tim, is that we not just have wealth creators here, we also have inheritors in Tiger.
Yeah.
And I bring it up because it's a fascinating dimension, having some inheritors in my group. When you're sitting at the table with an inheritor and you're talking about your children, those people are your children. Yeah. They have a unique experience. They can say, Rob, when you're setting up your trust, well, guess what? I was the person on the other side of that trust. And let me tell you my experience, and how inheritors bring in advisors and how inheritors manage wealth is really different from the people who create the wealth. It's really a fascinating mental dynamic. So we have diversity in that way too, Tim, on how people approach money that maybe they inherited, maybe they didn't earn.
Well, and I'm glad you raised that, Rob, because again, those dynamics are going to be very valuable because the rising generation there's going to be a secular trend like we've never seen in terms of a wealth transfer occurring, and understanding for wealth creators, how do you actually get counsel from those who've been in the position that their children or grandchildren may be in is in fact really, really important. We're at time. I just want to do two things real quick. Three, actually. First, Andrew from Oregon. We actually run pre-liquidity workshops. You asked what books or articles would you recommend. We actually run pre-liquidity workshops because we've probably got one of the largest communities of people who've been through liquidity events and understand what are the lessons learned that they will share. And so if you reach out to Tiger 21, we can talk to you about that. But it is an element that we really want to be able to share with people because members have asked for it, and they said, I wished I would have known this before I had my liquidity event. I also, Sarah, you'd asked about if all members are in the United States. I think you got the answer from that. The answer is no. We're a global organization. For those of you who I didn't get to your questions, my sincere apologies. Hopefully we'll have a time to be able to address those separately. I want to thank Rob and Lorine. You guys are fantastic. I love you. I love you even outside of this, but really appreciate you doing this with us. And with that, Mark Figueroa, let me turn it back over to you.
Well, thanks, everybody. We certainly covered a lot of ground in 45 minutes, and unfortunately, it's all the time we have today. So thank you, Tim, for moderating, and to Rob and Lorine for sharing your thoughts and expertise on today's call. And just a reminder, everyone will receive a copy of the asset allocation report that we've referenced today. It will be sent to you, everybody, to your email address that you registered for this webinar. As I mentioned at the start, this webinar is part of a series of conversations powered by Tiger 21. Last quarter, some of you may have been on it. We hosted a call on real estate opportunities, and be on the lookout for the next webinar. You had mentioned it before about next generation, and that's what we're going to be talking about, preparing next gen and creating a legacy that will last across generations. So look forward to that. Be on the lookout for that. And if you'd like to learn more about Tiger 21 and membership and just learning more about our global community, please visit tiger21.com. Thanks, everybody, and have a wonderful day.